Hey, everyone. Welcome to What's Happening in Real Estate This Week with Conrad Zarini, broker, owner of REMAX Escarpment and REMAX Niagara. Brian Hogbin, Mission 35 Mortgages. I don't know, Brian, you are either at your cottage or your place in Florida or your place in Hamilton. Wow, he's a rich guy.
yeah. Only if you rent them out when you're not there. That's the only way to do it. Okay?
Yeah,
I
think I should have gotten into the mortgage business instead of the real estate business. I don't know. This guy is either flying to his Florida home or driving up north. I don't know.
Well, not right now. Florida is not looking too pretty, so don't be saying that right now. Unfortunately, so
that's it. Question to ask you: is insurance expensive in Florida?
It is astronomical, and actually, it's becoming a problem because a lot of companies are not renewing anymore. A lot of companies are leaving it, and it's almost becoming like a monopoly of people that will insure down there. It is very, very, very expensive.
You don't know what you're going to pay either. There's some insurance that what happens is you're part of a pool and you pay X, and then what happens is if there's people drawing on it, you got to kick in like an assessment.
No,
so
kidding.
That's the other. Yeah, that's the other.
Like ours
that's
started
the cool
out
insurance.
Ours started out at $4,000 a year for house insurance. Probably about when we got it 5 years ago, it's up to $8,000 a year. So it's doubled in 4 years down there.
That's just the insurance.
We've been lucky. We're not even in the zones that have been hit per se, but we haven't even had a claim, and it's doubled. So it's
this insurance is hurting even up here in Canada. Isn't it like when you approve somebody, Brian? So do you approve them on the mortgage, or does the factor of insurance come into effect?
It's a great point, actually. Those calculations are so old that we use principal, interest, taxes, and heat. Right? We don't use an insurance payment.
Jeez, I'm telling you, man.
And you have to have insurance. No, but it's true, right? So when you're looking at those TDS, GDS ratios, and even the heat payment is a little questionable, right? Like, am I using $100 to heat a house? Well, maybe not Rob's house, but like if I use that in a calculation. So, and you're right, because insurance is getting more expensive and it's not even included.
I think having the insurance clause is more important now than ever before on a purchase and sale agreement. It just like reading up about what's going on in there was an article in the paper in California. A guy was buying an $8 million house, and he found that he couldn't believe how expensive the insurance was. It was like $140,000 a year. Are you kidding me?
Yeah.
And then he finally found somebody, and it's down to $60,000 a year. Even $60,000 a year for insurance is bullshit. Like, you know what I mean? Like, it's just like,
well, the state has the fire insurance one because nobody will cover you for fires, right? And there's no money in the state one. So people just keep putting money in it, but there's no money in it. So if there was another, catastrophe forest fire like they've had in the past, there's no money to draw on it. So it's complete. Yeah.
So you're required to have it, but there's no pay.
But there's not going to be any money to pay it. That's it. No shit. No kidding. No kidding.
Yeah.
You know what? Like Fort McMurray, they had a major, like how many years ago? That was 10, 15 years ago. Basically the whole city was just decimated. Yeah. Mm-hmm. So now they have just another forest fire happen. It wasn't as bad as the one 10, 15 years ago, but there was another one. Now, would their insurance be expensive like in the US? Like, I mean, there's forest fires up there. Like, so.
Well, postal code, a lot of it's by postal code, right? So,
right.
Mm-hmm.
Right.
You gotta think the more, and that's a good point. Like the more chance you have a liability, like even at my cottage, right? Insurance is a lot more expensive because of the distance to a fire station, right?
Right, so right.
Your chance of loss is going to be way bigger in case of a tragedy or in case of something happens. So they're going to charge you a premium for it, and it's harder to get. So to your point, that is a great thing to be looking for when you're looking at homes, when you're looking at a secondary home, vacation, whatever it is.
I bet you a lot of people.
Hydrants.
I bet you people wouldn't qualify like that. Like if you think about it, an average house. Okay, let's just say it could be like St. Catharines, Niagara Falls, or Hamilton, a $750,000 house. The insurance right now on these houses are about $3,000 to $4,000 a year. Would you say, or am I too high on that? Or am I getting ripped off from my insurance broker?
Yeah, I think so.
I would say you're probably closer to $2,000 to 2,500, but I guess, you have the Picasso in there and the ATV and the Mercedes, I guess depending on what you have insured underneath in there. So.
Okay. So, let's say 2,500. Yeah.
The Rembrandt.
The Rembrandt in the house. Yeah. The fake Rembrandt. So $2,500. So $2,500 for insurance. Okay. I like it's okay. Conrad, you got to be paying $3,000.
I'm over 3,000. Yeah, definitely.
Over 3,000.
Yeah.
And then
over 3,000. Yeah.
So, I mean, but you've got like a $10 million house. So you're doing pretty good.
and I got the dogs playing pool.
That's it.
The original.
Yeah.
I got that one.
So, but that does that's right. Like, I mean, insurance is more money than the heat in hydro.
Well, everything is it's terrible, right? I don't know. The Globe and Mail had a story today about like the different percentiles of people, and it's getting tougher and tougher to exist, really, when you're talking about all these expenses, right?
No kidding. It's just insane. But the big story is that Canadian economy adds 47,000 jobs in September. Unemployment rate falls to 6.5. So now they're saying that is going to change the dynamics of the interest rate drop at the end of this month. Do you guys agree with this, or is this just blowing smoke into the public?
I think as more information comes out, so all of a sudden a half a point cut went down to 30%, right? They were saying it was like over 50 for a half point jump, that drop. But then we have to remember too, we've got the inflation number, which comes out on Tuesday. So, right, these bond markets, I always joke and say they're like a crazy ex-girlfriend boyfriend. They're up, they're down, they're up, they're down, they're up, they're down, right? So it all depends. Yeah, it all depends on the information that comes out. So this just came out and it was unemployment went down, which is good for the economy, but not good for, an interest rate drop. But if inflation is below 2%, that's bad. Right. So then that'll maybe give cause for a rate drop.
It just goes to the fact that if you wait for the rate, it's going to be too late. Like we've been talking about this over and over and over again, guys. Like we have no control over that. Like, again, the bond went up. So long-term rates went up. Like there was this little window of opportunity. The market is so compressed that I don't know what people are waiting for. This is your best opportunity when you see these little windows, and you should jump at it. And that's the whole point. We've been trying to tell, this is what this conversation is all about every Friday, right? Like this is the opportune time to get in. Prices, you can still negotiate, you can do conditions, you can do home inspections, all that kind of great stuff. And there's still there's moderacy on price. You can negotiate. And jump in. Don't wait for this thing to happen, because when that happens, it's going to be like a free-for-all, right?
And really, the only way you know that you got the bottom is when you're buying on the way up. The only way you know where the bottom is if you're already on the way up. And I feel
it's too late.
It's too late. And we've talked about this with rates. Like the 5-year fixed rate is still in the low 4s. There's even a 3.99 floating out there.
Yeah.
And for people waiting for the variable to go down, like you said, we've been talking about this for months. The 5-year fix is probably on its way up now.
So there was another article. There was another article this past week. First-time home buyers fear Ottawa's new mortgage rules will drive up prices. So in December, I guess the rules take effect in December. First-time home buyers given a longer time to pay down their mortgages, the 30-year amortization. And so they and that's going to, with the interest rate drop, the 30-year amortization, everybody's going to jump in too fast, too quick. And like you said, Conrad, like get in now it's just, it's going to be insane. And I truly feel, and I was discussing this on the radio the other day, and I said, listen, get in now. The inventory's out there. Showings have picked up though, 8%.
Yes.
Am I correct?
Yeah, you're right. Yeah.
Showings on homes, and they picked up 8%. You know what? I'll tell you something. You know what's so great about what the stats you come out with, Conrad, is that those are real numbers. I don't think there's any other brokerage out there that can get numbers like that, showing numbers, like actually stats that show like, hey, we're up in showings this week, we're down showings in this week, either like looking at it from the prior week or even or last year's same week. I look at those. I look at that. I don't know if a lot of agents do, but I freaking look at that to see what's going on, and if I'm in line with the showings that are happening.
Yeah,
And,
they're real. It's real. It's real, especially the appointments per sale. That number's bang on. And if you're seeing 20 showings and we're sitting at 11 or 12, the market's telling you something, right? You know what I mean? It's just, they're just telling you something, right?
And this new mortgage rule, there's a lot of people in our space that say it's too expensive, right? They're saying that the mortgage insurance premium is high. Totally it is. They're also saying that, you'll be negative equity. You may be, right? But I'm a nerd on this stuff. So I want to bring you guys back to 2007. 2007, we had 0 down mortgages. If you can remember, we did a 0 down mortgage, and the insurance premium would go on top. So you weren't just kind of negative equity. You were full on negative equity, right?
Yeah.
You know what the default rating was for the following 5 years? 0.3 to 0.5%, less than 0.5%. And that's going through 2008 when we had our financial market crash, right? 2009, 2010. So I just bring that to people's awareness because with these new mortgage rules, people will buy. People are okay with, like, first-time home buyers are just trying to get into the market. They're not worried about paying off their house.
No,
they're just trying to get into the market.
Yeah,
right?
They just want to get on title. They want.
And
They
the
want to
default
own.
rating is not going to go high. Like, I realize there's additional cost, but guess what? And this is one for you, Rob. Guess what the average house price did between 2008 and 2018? What happens every 10 years?
It doubles, buddy. It doubles.
500,000 to 600,000. So the last time that there was 0 down payment mortgages or these high insurance premium availabilities, house prices doubled after 10 years. Yeah. So to your point, Rob, that you always say,
house prices double. You get in now, in 10 years, you'll build double the equity. So now, if let's say there's more jobs, the economy's going well, do you think they may just freeze doing any rate drop? Because this is going to stop builders. Builders aren't going to build right now. Investors are not buying any condos, so they're not going to be building any condos because that's what drives the market is the investors.
Well, even the builders are saying, even with this first-time buyer thing to 1.5 million, they feel it's not going to move the needle one iota. And one of the big stats, and I'm going to do my video later on today, is like in the next 3 years, there's 96,000 condos that are going to be taken possession of, right? They're being so think about that for a minute. So, like, going to your point, like they're not going to do anything. Like it's a real stagnant market for new builds, and that we need new builds to keep the whole thing going. So it's very unfortunate. Yeah.
Well, and you know what the developers are saying? It's not just the interest rate; it's the cost to build.
Oh, like it's terrible. Yeah.
It's expensive, and it's just it's not worth taking the risk. And how long do you think the builders were kind of like stay in the back seat and they'll build, but they're not going to be building a lot of big projects. They're going to go little bits at a time. Like, you know what I mean? Like they got little subdivisions and they'll just, build a little bit, just keep going. Like they don't want to take the risk because these guys have been carrying a lot of inventory in land and they're paying interest and they don't have money coming in from other big projects. And their bank accounts are getting smaller and smaller as time goes
trades
on.
The price for trades isn't going down. A lot of them are unionized too. And they're a force to be reckoned with, right? The unions, right? So bricklayers, laborers, so that's pretty fixed, right? That's negotiated. So unless something happens with more immigrants coming with trades, that are not, unionized, and I know some people are going to kick me in the teeth for saying that, but these costs are right there. Like I said it the other day, they got to do something with that HST. It's only up to 400,000 on new. It's got to be 800,000 or $1 million. That came in the 90s, 400,000.
I know. It's like that's ridiculous. I know. Okay, I'm going to tell. There's one question I want to ask, but you know what's so stupid? It's 400,000 in 90s. Way back, people don't even know this. If you bought lunch for less than $4, there was no tax.
Yes.
It's still on. Don't they think lunch is? Don't you think lunch is more than $4 now? You can't even get a donut for $4. Why is the government so stupid and saying, okay,
they love the money.
you know what?
The money.
It is bull. It's so much bull. Listen, lunch is, you got to do at least $10-15 for one single person for lunch. Stop taxing just a single lunch. But the one other question here, guys, tell me, is if once we get to a point where it's beyond repair, beyond where it's the crisis, what do you think they'll do? Like, it's just like they have to change something because builders aren't building, and we're in a crisis now, but we haven't hit bottom really yet. We're going to hit bottom soon, and it's going to be within 5 years. And what are they going to give to the developers and the builders, saying, okay, no development fees, no this. Like, they're going to have to start building. And when it's going to get to a point where we're so choked to the neck that they have to build, they have no choice because they keep bringing immigrants in. The builders are saying, hey, I'm not taking the risk. I'm not going to take a chance. When do you think that's going to happen, where they're going to say, okay, you're right, we should have done this 10 years ago, but now we're, they always do everything too late. You know that everything's always 5-10 years too late. And now that we're
honestly, I think that you'll end up seeing them drop the rates again. You'll end up seeing rates go down, and I think it'll be cyclical, right? Like, I think that you think it's the interest rates that's going to make everybody start buying again. Well, I think it's the hammer that moves, right? Like, it's like, and you've said that before, Conrad, the big hammer that the government has. They end up dropping the interest rate, it spurs people, and then they just have to have the confidence that the rates are going to stay low in order to build. But it's going to drive the prices of homes up, and it's just still people won't be able to afford it. Like, they gotta keep the prices of homes down, and
wages aren't keeping pace either. Wages are not keeping pace, right? We talked about the other day, 1.5 million. It's 125,000 down, 350,000 to carry that mortgage. With no debt. Come on, I don't know how many people that have 350,000 family income with no debt. It's a very small percentage, right?
It's crazy. It's crazy, but I don't know. I guess it is the interest rates, and who knows. So we just next year. I mean, hopefully we do get a 0.5 point, because I think we need it for this year, so it doesn't get too crazy next year. So hopefully we get rid of a lot of the inventory that's been sitting in the market right now. Yeah. But anyway, guys, we have run out of time, and I appreciate it. And I just want to say that Brian, you look like you're ready to do some major some combat stuff or kill somebody.
Well, we got to hunt for the turkey up here. Wild turkey. We're gonna go catch one. Okay.
You do not look like a mortgage broker. I don't know, if I saw you crawling in the woods looking for me, man, I think I'd be scared. Anyway,
there it is.
Oh, you need some black stuff on your face, buddy.
Oh, yeah, that's coming after.
Yeah. Anyway. All right, guys. Thanks a lot, and we'll catch you next week.